Hi, I'm Angela Parady, and this semester I worked with Ian Gallagher in a project we called Gallagher and Parady Investment Services. Given $100,000 to spend on a portfolio, we took our limited knowledge of financial management, the readings provided to us by this class, and jumped into the project head first. We're going to go ahead and get started with the project. Gallagher and Parady Investment Services. So based off the project parameters and our limited knowledge, we started looking at how long and short assets work together in a portfolio to hedge risk and take advantage of market fluctuations. While we were not actively managing our accounts, this still proved to be useful in our experience. After we thought we had an understanding of this concept, we then started working to understand beta. While not as knowledgeable at the start of the project, we knew that we needed to have a beta that was neutral in order to mitigate our risk. So we set out and tried to develop our portfolio. We looked at different stocks within each asset class to try to create a balanced portfolio that would increase in value with minimal risk. Each of the securities within a class we evaluated as a pair, and based on our analysis of them as a pair. We ended up choosing a vertical diversification strategy that touched on securities in equities, bonds, commodities, real estate, and currency assets, as well as exchange-traded funds. ETFs in particular provide instant diversification as they are already invested in multiple assets. We also wanted to make sure our portfolio was not just US-based, but also include foreign securities. We looked for securities with high trading volume, market stability, beta close to 1, and annual expenses less than 0.6%. Conflicting information on different websites and a lack of experience sometimes made us feel as though we weren't making the best choices, but we stayed the course, knowing that this was a learning experience. Our goal for the project was to have a beta close to 0, but we ended up with one close to 0.22, which is pretty good considering our limited knowledge. When looking at our project, we used 2 web-based portfolio correlation techniques. The first was macro axis, which gave us the correlations in this color-coded chart. The green boxes are risky portfolio decisions, and the red are safer correlations. Ultimately, we want the fewest green possible and the most red. Given our diversification, we weren't able to completely get rid of the green. The second chart, which was based on the portfolio visualizer, this showed us where we were short on the other chart. This showed us the long and short portfolios. The data shown in the second chart is different from the first chart, with one key correlation being completely off, but the rest were fairly close, which made us very confident in our decisions to go ahead with this portfolio. For our next step, we tried to figure out how we actually wanted to divide up the $100,000. We really wanted to try to have a portfolio that was dollar neutral. So we kind of worked on it that way, as opposed to trying to hedge as to get the beta to 0 using weighted betas. As you can see, during the 11-week trial period, we experienced a positive return. Overall, it was 4.37 according to Google Finance, or Agrawal's portfolio calculator gave us a return of 4.73%. We actually made $2,817 after all the taxes and fees. But you can see that we definitely had some highs and lows during that point. Compared to Treasury bonds, our portfolio performed 4% better. Treasury bonds steadily declined over the past 3 months, while our portfolio grew. Compared to the S&P 500, we showed a 2.96 holding portfolio return for the same time frame, with annualized returns of 13.83%. On this chart, we can kind of see that where we made our money was our short positions. All of those securities lost money during our time period, so we made money on them. Unfortunately, all but 2 of our long positions also decreased in price, so we lost there. Our biggest hit were Coresight Realty Corp, where we lost over $1,000, but we also lost on Carlisle, USAA, and Wisdom Tree. However, during that same time period, we made over $2,000 with Resolute Energy Core, which accounted for over 91% of our total net gain. We continue to do back testing, comparing our charts to our results to events in 2008 and 2011 to see how we fared. And we did better compared to the market during the recession of 2008, but we did worse, but only marginally, during the tsunamis and natural disasters in Japan in 2011. For brevity's sake, we're going to go ahead and skip ahead a little bit. So during this course, we were provided with an abundance of information. Understanding how long and short options worked has actually given us a much better understanding as we watch our portfolio rise and fall. And it's interesting to see how we might have done things, how things might have gone if we had done things differently. As you can see in our actual portfolio report, we ran some optimization tools to see how we would have fared had we actually done things a little bit differently. Overall, I think that this was a great learning experience, and we were able to have fun and learn financial management in a much different way than I think we would have been able to otherwise. Thank you very much. Have a great day.